creating wealth, freedom, and security using real estate investing. This is Get Real Wealthy. You're watching Get Real Wealthy. All right, let's talk about, should you stay or should you switch on your current mortgage? I get a lot of questions about mortgages. It seems to be the type of conversation that everybody wants to talk about. It's interest rates and mortgages. I've got family members who contact me and ask me questions, and everybody else in between. What should you do? Should you stay or switch? Some people think that interest rates are the only thing that you should be looking at, but terms are just as important when it comes to deciding on whether you should stay or switch on a mortgage. But there are other things, like when I say terms, I don't just mean like a 1-year term or a 5-year term. I also mean terms like prepayment penalties. Let's say you get a bunch of money from an inheritance and you want to pay down of some of your mortgages, like your mortgage. Some mortgages will only allow you to put down 10 or 15% in a year. Other mortgages, you could pay the whole thing off. So the type of flexibility that you want will be affected by the type of mortgage that you get. Another thing that you're going to want to think about is the current rate versus the new rate. And what is the potential savings? So if your current rate is 5% and the new rate is 3%, there is an equivalent savings of, let's say, 2%. But sometimes it depends on different factors. It's not as easy as you might think, because even though, let's say, mortgage rates come down from a federal perspective, it doesn't always mean that the banks will match those changes. So you have to really find out from the bank or the mortgage broker, what the actual rates are. Don't assume just because rates have come down from a federal level, like the Bank of Canada rate amount, that it's going to be the same at the financial institutions. The other thing you want to look at is the interest savings over the term of the mortgage. So it's not just the interest savings based on, the month. It's about, let's say the term of the mortgage is 3 years, or the term of the mortgage is a year, or the term of the mortgage is 5 years. You want to be able to play that out, because you also, anytime you're locking into a longer term, you're basically taking a bet that mortgage rates are lowest at this point. So that's something that you want to keep in mind. You want to know also what the mortgage balance is going to be at the end of the term, with or without switching. So if you can find out what the mortgage balance is going to be at the end of the term, with and without switching, you'll be able to do some comparisons. So for example, your current rate is 3.69, but the new rate is 2%. There's a potential savings of 1.69%. But if the monthly payment before refinancing is $2,748.80, but after refinancing it's $2,173.88, that means that you're actually reducing the cost of payments over the new term of $34,447. Interest savings from lowering the rate over the new term is a $9,626 savings. But in order to do that savings, you have to break the mortgage that you have, and the penalty to break that mortgage is $8,000. So then you have to decide what the benefit is. But you also want to look at the net benefit. So the net benefit is the $34,447 plus $9,626 minus the $8,000 penalty. Okay? If you only looked at the savings of the balance of the term, it would be less. Okay? So you want to be able to look at both the cost over the new term, as well as the cost for breaking the mortgage and the interest savings when you're doing that comparison. I hope that made sense to you. We should probably do an explainer video on that. But if you find that you were a little confused, send me a quick note on QManREI on the Instagram, or send me a quick email at quentin@getrealwealthy.com. And just remember, there are other things that you need to consider when you are switching from your current mortgage to another mortgage. It's the prepayment penalties, the difference in rate, the interest savings over the term, and the mortgage balance. All of those things together can help you compare apples to apples rather than apples to oranges, which is not what you want to do. All right? Have a great one. Remember, get real wealthy, and we'll see you on the next episode. Make sure to check out getrealwealthy.com. Until next time, I'm Quentin D'Souza. Get out there and take action. The views and opinions expressed in this podcast are provided for information purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to getrealwealthy.com.